Good morning, everybody. It's Chris Robinson, Rob's Ag Marketing. Today's pre-opening grain and livestock comments for Wednesday, the 24th day of June, getting closer and closer to the June 30th report. We'll see today if cattle can hold yesterday's low. Key area in fat cattle 246. Key area in August feeders, the 367 area. And of course, July hogs if we take out 94, we'll be making new multi-month lows. So maintain your protection, guys. I can tell you, I feel like a broken record, but the protein complex. The one thing the protein complex has going for it is the stock market's still high. The funds are still long the cattle. However, they are short the hogs. In the grain markets overnight, another 4 cent range in corn. Corn did manage to trade to 440 in these corn. Settled this morning here at 438 and 3/4, up a penny and a half. Novi beans 1142. Again, as long as we settle above 1137, that halfway back, I think beans have got a story. If beans start leaking, and if we were to ever take out $11, it's not that far back to the beginning of the year when we were down at 1055. So there's $1 worth of risk in beans. Is that worth a hedge? I don't know. It's up to you. With the corn, there's 30 cents worth of risk if we flush here. The July spot corn is what I'm looking at there. There's a big long-term trend line which goes back 6 years. There's no real support down there until about 385. So that's where I come up with that number. You take 411, which is where we are this morning, subtract from 385. You've got 25 cents worth of risk, 25 to 30 cents. Not a time to have expensive puts on the books, but if you want to defend that 25 cents, it's probably worth a couple pennies to have a hedge on before the USDA report. Crude oil, just about to take out $70 a barrel. 70.37 was the low overnight. So regardless of what the news says coming out of New York or Iran, the crude oil market thinks that we're going back to where we were prior to the 28th day of February. There's a gap down there at 67.83. Again, right now we're trading at 70.50. We did trade 70.37. So we're a couple bucks away from filling that gap. That's probably too tempting of a target for these guys to not go get it. So that's kind of where we're sitting. The big inflation. If crude oil goes back down to $50, I think it's going to be a big takeaway from the near-term inflation that we've had. However, if things were to go sideways, and if somebody gets mad or somebody says something, we could very easily spike up there and get a crude oil. But for now, Mr. Market's telling you he thinks it's going low, the dollar's going higher. We had talked about silver, 61.60, right? We had tested that area a bunch of times here. We are now under it. And I discussed this in my letter. I talked about it in the webinar. If you're trying to buy the bottom down there at 62, 61, now you've got a new decision to make. We're trading 58.70. So you're not obligated to ride it into the ditch. If I'm long silver here, I want to make sure I know, how much heat I'm willing to take. The next major low that I can see going back on the charts is the December 4th low. It's around $56. That's about another $3 from where we are now. And then I would watch the old highs from October, which are around 54. So we're at 58.75 this morning. I would say there's $3 to $4 worth of risk here in silver. And we'll see if that rolls over. If we start to see money flow based on what's going on with the dollar and the metals. So we'll get after it today. Today's Wednesday. I'm going to be on RFD TV at 11:45 today. Tune in or listen on the radio on Rural Radio 147 if you've got Sirius. This is Chris. Have a good day. 312-638-8868. If you're looking for help, give me a call. If you're not getting my letter, robinsonagmarketing.com. Take a look at it. You can cancel at any time.